I get to see hundreds of financial statements and real estate portfolios. I see the income, I see the assets, I see the number of properties, but I also see the debt. And I can tell you that how your debt is structured, how much it's costing you, and how far you're going with debt is a huge factor in determining your success, especially when the cost of money goes up. So let's take a look at where the opportunities to restructure debt are. We're going to talk about 4 major areas. The first area is your mortgage or mortgages if you have rental properties. The second area is what I call toys. These are loans on your car, on your boat, on your jet ski, on your trailer. These are the toys. The third area to restructure is credit cards and unsecured lines of credit. And the fourth area is where negotiation comes in. So let's dive deeper into each of those. All right, let's start with the most powerful play for tackling your mortgage payment. Conventional wisdom says that you shouldn't break your mortgage, especially if there is a penalty. I'm here to tell you that conventional wisdom is not always true. It really depends on your priorities at this point in time and your financial situation, especially for those of you who are experiencing a cash flow squeeze because you've been in a variable rate mortgage, or your renewal has come up into a higher rate environment relative to where your old rate was. Or especially if you currently have a private mortgage or an alternative lender mortgage option where your interest rate is high. For you, the play we're about to discuss is what I call the strategic break. This could be one of the most effective financial strategies to implement. We're going to talk about when it works and how you can run the math to determine whether or not this is the right strategy for you. Let's run a clear example. Let's say you currently have a $500,000 mortgage, and the interest rate on this mortgage is at 6.5% with a 25-year amortization, and the monthly payment on this mortgage right now is $3,349 per month. And let's say we found a lower interest rate for you at 5.25%, and that we're keeping the amortization the same at 25 years. And by switching to this lower interest rate mortgage option, your monthly payment goes down to $2,980 per month. So you're essentially getting an additional $370 of monthly cash flow by switching. Now the question is, does this move make sense? Is it worth your while? And that's where we have to look at the cost of switching over. Let's say that this mortgage has 3 years left. That is 36 months left in terms of the remaining term. And let's say that it's going to cost us $15,000 to break this loan. That is the penalty to break it. So is this move worth your while? The way we would look at it is we would say, how long is it going to take us to break even? How long is it going to take us to recoup this cost? So if you take the $15,000 divided by 370, you are going to get 40. So it's going to take us 40 months in order to recoup that cost, to break even. And if this loan has 36 months left, then it's obvious that there is a cost to actually switching versus staying in this loan. And the difference here is 4 months, and that cost is $1,480. So is it worth your while to invest $1,480 to get $370 a month? It really all depends. It all depends on what's most important to you. If getting cash in your hand every month is important compared to what this loan is gonna cost you, then yes, that move is worth your while. But if your objective is to save, then that loan obviously is gonna cost you a little bit more. And if this penalty was, let's say, $5,000, if that number goes down to $5,000, and we again look at how long it's going to take us to recoup by dividing the $5,000 over the cash flow of $370, the new number we're talking about is now 14. So it's going to take us 14 months to recoup the penalty, and we're getting $370 per month. That 14 months is obviously much smaller than the remaining term. So in this particular case, it's a win. You're getting an extra cash flow and you're going to be ahead as well. At the end of the day, the analysis matter. Crunching the numbers, looking at the cost of switching over the savings, looking at what's most important to you, and that's how we make an informed decision. But the most powerful version of the strategy is not in helping you save a percentage point. It's in helping you quantum leap your financing, especially if you currently have a private mortgage with a high interest rate and a high monthly payment, or an alternative lender mortgage at a higher interest rate compared to what you can get from a bank. And it's easy to feel stuck, and it's easy to think that that's all you qualify for based on the last mortgage you're able to get. But I'm here to tell you that that's not always the case. The ultimate strategic break is what we call graduating your mortgage. Essentially, through all of the debt restructuring strategies I talk about in this video and helping you improve your credit score, we're able to graduate your mortgage from where it is right now with a private lender or an alternative lender at a higher rate back to a bank at a much lower rate. This is not theory. This is what we do every day. We've literally helped thousands of clients graduate their mortgages from a 10% payment or a 7% interest payment over to a bank rate in the 5s or 4s. How do we do this? We do this by implementing all of the strategic debt restructuring solutions I talk about in this video, and helping you as a client also improve your credit score so you can switch over from an expensive lender to a cheaper lender. So please do not assume that the current private mortgage you have or the current B or alternative mortgage option you have is your ultimate reality and is your only option. I want to invite you to get a second opinion from one of our qualified mortgage advisors at Streetwise Mortgages. They will look at ways to strategically restructure your debts, seeing how we can help you move from an expensive option to a cheaper option, help you look at whether or not a strategic break makes sense in your situation, and that could open up lots of possibilities for you. So connect with one of our advisors at Streetwise Mortgages by clicking on the link in the description of the video.